Hi everybody, this is Opsreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that are on our radar, uh, and some stocks that are currently in play. If you look here, okay, so first up is RNN. Okay, this stock closed up 11%. We were tracking this bounce play. We had put out alerts that it had formed multiple red candles in a row. As you notice here, there were what is this, like 8 red volume bars in a row, and then it formed this doji here on Tuesday, and so that was our signal that it was setting up for the bounce. And then today we finally got that move above EMA 4 at 193, the pink line, and it also closed above EMA 8 at 198. So that was a really bullish close above both levels on a big volume spike. Notice how it was the largest volume since the big red volume bar on the big drop on the gap down. And so basically what happened is that there's the candle up here, and this is the top of the gap up here in the 280s. And then the bottom of the gap's down here right at about 225. And so currently that is the target. So we're looking for a run up here to the bottom of the gap at 225. And just above that's the 50-day simple moving average at 230 and the middle Bollinger Band at 230. It has to get back above both of those levels to get a new uptrend going. Many times when you get a bounce like this, the share price works its way back to the bottom of the gap, and that becomes resistance. So we'll see here if it can follow through. It will need to break above EMA 13 at 208. That's the next resistance level to break. Notice how this was a double bottom bounce. So yeah, so nice move, everybody. Congrats to everyone that caught the alert. Notice there's an 8, 13, and 5 MACD bullish crossover. Okay, now let's take a look at ARLZ. This stock closed up 6% today. This was another stock that was on our radar. We put out alerts to have this on your radar for a bounce. It had formed five red candles in a row when we were looking for a potential bounce on this day, where on Tuesday when it broke above EMA 4. It ended up not closing above that level, and then there was another red candle had formed yesterday. That formed the 6 red volume bars in a row, and then today there was the nice bounce. Bullish engulfing reversal pattern formed, and there was a close above EMA 4 at 141. That's the key level to stay above. For these bounce plays that are riding EMA 4 resistance lower, if they can stay above EMA 4, they remain in play, but EMA 4 is the stop loss level. If it drops below EMA 4 and closes below that level, it will be a risk to hold. The 100-day simple moving average at 142, the gold line, is the key level to break. It needs to get above that level, then EMA 4 at 149. Just above, you've got the 50-day simple moving average and EMA 13 both converging here, and so that will be a big resistance level to break. If they see a close above this EMA 13, which is the top moving average here of the moving averages that are converged in the zone, then you could see a run back up to the middle Bollinger Band. Fail to break resistance, and that will signal more consolidation. So yeah, this was a really nice bounce. It just has to follow through and confirm that reversal pattern. Notice that the 8, 13, and 5 MACD is pinched, so a crossover could signal will signal the chart is really heating up, and and the bulls are taking control. So let's look at the CNXR chart. This closed up nearly 20%. It's still at oversold levels on RSI and Fasto. Did have the bullish crossover on Fasto today, and this is another a bounce play similar to the other ones. Notice how the other 2 stocks we just covered. Notice how there were multiple red candles in a row, multiple red volume bars in a row. There were 6 red volume bars, 6 red candles. When a stock forms 5 red candles in a row, it becomes a candidate for a good bounce play. And so each day that it forms another red candle, it becomes closer and closer. So you just want to keep an eye on it and wait for that signal that the chart is ready to go. Today it bounced off of this 25 support zone. It broke EMA 4 at 314 temporarily, but it pulled back, so it's going to need to close above that level. If it can get above that level, then the target's going to be the bottom of the gap here. Notice there's a gap between this candle and this candle, and EMA 8 at 386. So that's the target if you can get above EMA 4 at 314. Notice there was a big volume spike today. So keep an eye on CNXR. Okay, now let's look at RVP. Okay, so there's a good lesson here on this one. Okay, it is above 50 on RSI. So notice that it hadn't been at 50 since before the big drop. There was a big gap down and a huge drop on the chart. So this is a big signal that the chart is really heating up. Notice that after this big drop down here, RSI bottomed out, okay, below 30 at the oversold zone, and notice how it's just been on a steady uptrend ever since. So this is a signal the chart's been building strength and heating up, and now that it's above 50, it's in the bull zone. So it needs to stay between 50 and 70, and that would be a signal the bulls are still in control. Now our Fasto corrected because a long upper wick formed on today's candle. Just quickly here, that there's a bull cross on ADX here. You can see ADX crossed minus DI to the upside, and then you've got the plus DI crossing minus DI to the upside. So those are signals that the bulls are taking control. So basically what happened here was there was a nice run above the key resistance levels, the top of this gap. Currently, the closing price here on September 28th is the top of this channel. Notice how since there was a gap down, okay, so this is the top of the gap, okay, this is the candle, and this is the top, and then this is the bottom, and then there was this huge drop, and you can see here there's a channel formed after the drop, and so it hit a top here, came down. This is the bottom. Down here is the bottom of the channel, and so it hit the top, came down, hit the bottom, came back, hit the top, and then it traded sideways, and then today it hit the top again, and so it's got to bust through this resistance zone to head higher. Now the bullish development is the 50-day simple moving average is turning into support. That's the green line here at 638. So that as long as candles stay above that level, then it will remain in play. If you see it drop below, that'll signal more consolidation. It's been working on turning this middle Bollinger Band into support for quite some time. The Bollinger Bands are tight. Notice that the upper Bollinger Band is hooking down. That is not what bulls want to see. They want to see the upper Bollinger Band hooking up and the candles riding higher above EMA 4 and 8 support. And so if you see it close above 70, that's going to signal it wants to head higher. It's got to break above this high of day. That's what this red line's from. And then what our target's going to be all the way up here at the 100 and 200-day simple moving averages between 93 and $1. And so 80 now is going to be a level to break because that was high of day today. But what happened is it formed this forms this doji here, and so with the long upper wick, and that shows profit taking and possibly some dilution. Sometimes that does happen when they pull it back for people to load. If you look down here on accumulation, distribution, and CMF, notice how there's a big spike down on both indicators, even though the share price was up today. That's not what you want to see if you're a bull. You want to see a spike up, and so this is profit taking. This is what it looks like when companies sell shares. But there are times when they pull it back for people to load, and so we'll see if that's the case. We will know by whether or not the 15-minute chart stays bullish, and I will show you that next. So it's all right now about holding this 63, 64 support zone. If it drops below, that signals more consolidation. If it holds, that signals that it's in play, but it has to close above 70 to get moving higher. Okay, so now let's take a look at the RVP 15-minute chart. And so this is a 3-day chart. This shows the really tight Bollinger Bands before the breakout. Notice how the Bollinger Bands were really tight, and then it started riding above the middle Bollinger Band. Notice that it's above all the moving averages here as it's cruising above the middle Bollinger Band. That signaled it was in play. Down here you have the 300, the 200, the 100, and the 50 simple moving averages, and then you have the middle Bollinger Band, which is the dotted purple line, which is also the 20 moving average, and so simple moving average. And so what you have here is you had a nice uptrend going, and then it finally broke out. The clue that it was ready to run was the big volume spike. Look at the volume spike here at 12:15. Okay, so that put it like in play, and then it ran up, but it hit resistance, and then it formed a climax spike. Look at what happened here was it hit high of day at 80 and it pulled back, and then a big red candle formed and a big red volume bar. And so this is what we call the climax spike. This is the signal to get out if you're a day trader, if you're looking to flip, because it signals it's going to pull back. Now it came all the way back down to the middle Bollinger Band. It bounced, but then it ended up breaking support here at 315. Okay, so that signals downside risk. It did come down to the next key support level, which is the 50 simple moving average at 66. It needs to stay above that level. If it fails to hold that level, if it breaks below 66, that's going to signal more consolidation and it's not ready to go. Now if it can stay above that level, that's going to make a more bullish 15-minute chart. And then what it has to do is get above 69. Look, once again, we have that 70 level, the level from back here, this key resistance level 69 was the high close here on the 28th. That is lining up as the key resistance on the 15-minute chart. It's the middle Bollinger Band. So once it gets above that level, that'll signal that a new uptrend is going, that you know, this breakout was for real. If 69 turns into resistance, that signals that this was a head fake. Notice it formed an Eiffel Tower pattern. It was a big run up and then a big drop down, and so it really has to break back above that 69.70 level to get moving again. Okay, so take a look at BONT. Now this stock ended up closing down 13% today. It had a nice 2-day run. Keep in mind, you know, nothing goes straight up. But the red flag for today, the red flag yesterday that was signaling that today had a chance of being a down day was the long upper wick on yesterday's candle. Okay, so we discussed this in yesterday's video. You know, the big pullback and the close below the 300-day simple moving average did signal downside risk. You know, it showed profit taking and dilution. I showed the spike down on accumulation, distribution, and shaken money flow. And notice that the real candle body yesterday was floating above the upper Bollinger Band, currently at 70. That's the solid purple line. Many times the candles will work their way back into the bands. It doesn't signal that the chart was broken or that the uptrend isn't intact. It's just stocks don't go straight up. Sometimes they have to work their way back in. It hit the key resistance level. The 300-day simple moving average on the daily chart is the biggie. It hit it and it failed to break. That signals consolidation. Now it's holding the 200-day simple moving average at 72. That's the red line. So that's a really important level to hold. The bullish development today was that it pulled back and it filled the gap. Notice there was a gap between high of day, which is the top of the wick here on the 24th, and low of day, which is the lower wick on the candle on the 25th. There was a space between the two candles. That gap filled today. So many times a gap fill is a catalyst for a bounce. Okay, and I'll show you that next on the 15-minute chart. But in order to head higher, it's got to start trading above the top of the gap. So now that's a big resistance level. It's got to get above the bottom of the gap as well. It needs to hold 72. Now if you see 72 break tomorrow, the next key level to break is going to be 65, or hold is 65. That's EMA 4. If stocks hold EMA 4, that signals they're super bullish. If it breaks below that level, that signals consolidation, and then you would have the 50 to 55 on deck. Notice you have EMA 13, the 50, and the 100-day simple moving averages, and EMA 8 all converge between 50 and 55. So this is a huge support level. So the downside risk is a drop below 65 puts 50 to 55 on deck. It could still stay in a very nice uptrend and hold this level. Okay, so what you're doing is you're using the spikes, the big run up. Remember, we put out alerts to take profits at 130, or you know that it was topping out and this was a good level that it was going to hit resistance, and so it did that at 130 and it pulled back, and so that was the signal to lock them in. And if you're a trader, what you do is then you load on the dip for the bounce. It gives you the spikes give you a chance to lock in gains, and the dips give you a chance to jump back in. And so as long as the chart's bullish and it's an uptrend, you can work it as the share price is heading higher. As long as the middle Bollinger Band down here at 43 is holding, the uptrend is intact. So what we're looking for now is for a bounce. And so this is the 15-minute chart we've been working on. You can see here these are annotations from yesterday. We were charting the whole thing, and then we alerted the top here at our 134 target got hit, the 100 SMA on the weekly chart, and that signaled the top. And then if you didn't get out there, the break here down at 2 o'clock below the ascending support line in EMA 4 and actually EMA 8 as well, that signaled downside risk. Notice it dropped all the way down and rode EMA 4 support the entire time. We nailed that call. It was perfect. And then we even put out a thing saying an alert. We did an update saying gap fill is the target. Okay, that we put that out way up here, and then it came all the way down, and look, it hit our target and it filled the gap. And what did it do? It bounced. All right, this isn't magic. All right, this isn't like I don't have a crystal ball. All this is history repeating. How do I know that this is going to happen, or have a good idea that these are the targets and these are the zones? Because history repeats over and over and over again. What you end up learning when you learn how to chart is that the patterns never change. The only thing that changes are the ticker symbols. And so once you learn the patterns, you can follow the patterns and you can have successful trades. And so here the key was to load on the bounce, and so that was the load target was down here between between 65 and 70. It held that level. And then it ran up here above the 50 SMA in the middle Bollinger Band. This candle right here at 145 put it back in play, because for us in play means it's trading above the 50 simple moving average and the middle Bollinger Band on the 15-minute chart. That's a signal that the chart is healthy and that it could, you know, that it signals that it wants to run higher if support holds. It's a big if. Now, when this candle right here at 215 broke the 50 simple moving average, that was a red flag. It's no longer above the key level. And then it pulled down, and then it closed here at 315 below, or 330 below the middle Bollinger Band. That was another red flag. And then here at the closing bell, it closed below the middle Bollinger Band as well. So it has to get back above that level. That's at 77. If 77 turns into resistance, that's going to signal possible continuation of the downtrend. It has to hold this support zone here from what is that? What was the low? 67 to 70 support zone. If it can hold that level, then it should continue the uptrend. Down below, the 100 simple moving average at 64 is the next support level. If this bottom of the gap fill level fails to hold, for a big pullback, if it has big correction, then all the way down here at the 200 and 300 simple moving average at 44 and 48, you usually get a nice bounce off the 300 simple moving average if it's tested after a big pullback. But what would be best for the bulls is if it gets back above that middle Bollinger Band at 77 and then breaks back above the 50 SMA at 90. That would signal it wants to head higher. Okay, let's look at HMNY. This is another stock that we've been tracking, and just by using the charts, it's just been it's been performing very well. You haven't had to do much here, but if you were following the charts, the signal back here was to enter back in September when it broke above all the moving averages and started writing EMA 4 support higher. And then we targeted the top here on that monthly chart when we showed resistance from back in 2005, and we nailed that perfect and in the 30s, and that was the signal to get out. If you didn't get out there, then your signal was here when the EMA 4 support broke, and then it's been heading lower, writing EMA 4 resistance ever since. And so we put out alerts saying, once again, our target was the gap fill. Okay, so once again, we were like, okay, look, this gap in September is our target. It came right down there. Today, the gap filled. So it filled the gap. Notice the lower wick on today's candle hit 11, and so that was a gap fill, which is a catalyst for a bounce. And this did have a technical bounce. I'll show you on the 15-minute chart, but it failed to close above the key level. That's EMA 4. So in order for this to be officially a bounce play in progress for our strategy and our theories, it has to be above EMA 4 at 1257. If it fails to break that level, then it will still signal downside risk. So the 15-minute chart is heating up. I'll show you that, but it has to get above the EMA 4 on the daily chart. If that continues to be resistance, then our target is going to be down here at the 50-day simple moving average at 937. So a drop below the bottom of the gap, a drop below 11, puts 937, the 50-day simple moving average, our target. For it to be in play, we're saying it really needs to be above 12. It didn't close above that level today. It closed at 1161, so it was a risk to hold overnight for us. It has to get above this 1257 to be a good bounce play. So it's heating up. Let's show you what happened here on the 15-minute chart. Okay, so it came down and it formed the super tight Bollinger Bands. Okay, that was your clue that it was setting up, and then it broke out above the middle Bollinger Band, and then the close right here at 1145, that signaled that it was in play. It closed above the 50 simple moving average on the 15-minute chart, and so we needed to see that level turn into support and then head to the next key resistance level and break that. And so the next key level was the 100 simple moving average, currently at 1278, and then also it was the high close here. It did break above the high close here at 1115, so that was signaling that it had more upside. You could see here the high close, but it ended up finding resistance and it pulled back. And when it came down here and it dropped below the middle Bollinger Band and the 50 simple moving average, it made it no longer in play. That happens sometimes. Like the alert in the chat was it's in play as long as it stays above 12. It was only above 12 for a couple couple of hours and then it pulled back. So that happens sometimes. You just have to you go back to the sidelines and then you look for a new entry. And so now we're looking for another entry that would be above the middle Bollinger Band at 1218. It needs to get back above that level and above the 50 simple moving average at 1195. Once again, it's got to get back above the 12s, and then now this 100 simple moving average at 1278 is a key level. If it can get above that, that's when you're going to know it's going to really be smoking, because that is lined up now with the top of this channel. So now it's got a 2-day sideways channel going. It's bouncing off the bottom of the channel. Now the downside risk is if it breaks below the bottom of the channel. So if, once again, 11 was a low of day. If it breaks actually below this 1130 zone, that's going to signal downside risk. So yeah, so keep an eye on the HMNY. It's setting up. It's either going to be here or it's going to be a break here after filling the gap, which is many times the catalyst. But if for some reason that doesn't happen, then look for a technical bounce off that 50-day simple moving average at 937. Okay, keep in mind, any stock is a risk to hold if it's forming candles below EMA4 on the daily chart. Keep that in mind. All right, thank you. Unless you're short. Yeah, if you were playing your cards right, you're long the whole time here, and then on this candle right here, that's when you take your position to go short. And this was an easy short from 30 now all the way down to 1161. Of course, you can make money both ways, going up and going down. All right, yeah, if you'd like to learn more about all this, come check us out at our chat and on our website at mychartcoach.com, and please watch the videos and subscribe to the YouTube channel at mychartcoach.com. Thank you.